Let's interact with Sanjay Bembalkar, the Head of Equities at Union Asset Management. And Sanjay, thanks so much for joining us on the show. And first of all, very good afternoon to you. We've heard about this fund of funds, the second one that you have launched. Tell us a little bit more about this. Talk to us a little bit more about the gold ETFs and also what kind of returns can we expect to see.
Pleasure to be here. Thank you. We have launched this gold ETF fund of fund with intention to provide a strategic diversification alternative to investors. We believe that in the current construct of geopolitical uncertainties, monetary policy changes, and tariff wars, we believe that gold is a significant asset class to have. We have seen gold historically has negative correlation with the efficiency asset classes like equities and debt. Gold being a scarcity asset, it has different drivers than what typically we see in the efficiency assets like equities and debt. And that's why we think that investors can use this asset class, particularly in current timeframes. And also from long-term strategic allocation, we believe that it's a fantastic asset class to diversify in. And that was the rationale behind launching these funds.
Right. Hi Sanjay, this is Ankita also getting in. Good afternoon to you. Sanjay, tell us, gold has done very well, last year, all through last year. And, this year, the way, markets are performing, gold is a safe haven, but gold is also sitting at very record high levels. So from here on, how does, if an investor wants to get into gold, for that margin of safety, is it the right time? And also, what is the upside that you see for this year?
Sure. So what we have analyzed is that in past 5 years, if you look at 3 years, gold has outperformed the Nifty as well as on the debt returns. We believe that when there is a geopolitical uncertainty, monetary policy changes, such kind of timeframes are typically very good from the gold perspective. Indian rupees gold price benefits not only from US dollar gold price, but also benefits from USD INR changes. So currency volatility also adds or reduces from the gold returns, as the case may be. Currently, if you look at the US dollar appreciation and currency depreciation, it has gold in rupees terms has benefited from that move. We believe that considering the overall situation where central bankers have been significant buyers in gold in last 2 years, we believe that such kind of trend is likely to continue, and that would aid performance of gold over a foreseeable future as well.
Okay, also help us understand in the current market scenario, how much of an allocation in terms of percentage of the total portfolio should gold have in a retail investor's portfolio? And also, what are the advantages of investing in an ETF compared to the gold metal itself?
No, that's a very good question. And we dealt with this question when we launched our multi-asset allocation strategy as well. There are a lot of research internationally available which indicate somewhere around 15 to 18% allocation to gold should be there. We believe that considering the current situation and India's situation in the global macroeconomic scenario, we believe that 15 to 25% allocation should be considered by the retail investors. And that's why even in our multi-asset allocation strategy, we have 22% allocation allocated to gold as such. We believe that owning gold, there are 2 or 3 routes to own gold. One is a physical metal, as you highlighted, or owning a paper gold through either gold ETF or gold ETF fund of funds. We believe that when we own a paper gold from the in gold ETF or gold ETF fund of fund perspective, there is no emotional attachment. And I have seen many people who buy physical gold, it becomes difficult to actually sell that gold once because there is emotional attachment, and also headache of purity, headache of storing the gold has to be taken by the individual investor. We believe that in such kind of circumstances, it is better to have a liquid portfolio through gold ETF or gold ETF fund of funds, and without any emotional attachment, we believe that that would be crucial from the investor's perspective.
Okay, Sanjay, on that note, we'll let you go. Thank you so much for joining us and explaining what this fund of funds is, and good luck on this fund going ahead as well.